I'm Chris Matthiessen, a member of our merger arbitrage investment team here at Gabelli, and I want to provide a quick update on the global M&A market. Deal activity in the first half of 2023 was healthy at $1.3 trillion in announced transactions on the back of 28,000 deals. $750 billion worth of deals were announced in the second quarter alone, the strongest 3-month period in the last 12 months, and a 33% increase versus the first quarter of the year. The US accounted for about 40% of global deal volumes, with about 7,500 deals being announced domestically. But the M&A market had to contend with a more stringent regulatory environment and higher interest rates, in addition to a regional banking crisis and continued geopolitical issues. Deals announced within healthcare led the charge on a sector basis, as nearly $190 billion worth of transactions were announced globally, or 14% of total deal volumes, and a 43% increase versus 2022 levels. Energy and power and technology both accounted for about 14% of deal volumes, but declined compared to a year ago. Deal making outside the US saw a significant leg higher in the second quarter of the year, with about $460 billion announced in the second quarter outside the US alone. Confidence among global executives is beginning to return and leading to a search for acquisition targets around the world. But the main theme for the first 6 months of the year was the more stringent regulatory review process that global regulators signaled. On May 16th, the Federal Trade Commission, the FTC, announced it would sue to block Amgen's $27 billion acquisition of biotech company Horizon Therapeutics. And just a couple days later, on May 22nd, Standard General walked away from its $5.4 billion transaction to acquire TV station operator Tegna after the Federal Communications Commission signaled that it would not hold a vote on the transaction. And of course, we've had the drama unfolding with Microsoft's acquisition of video game developer Activision Blizzard. The transaction received approval from the European Commission in May, and the parties defeated the FTC in U.S. District Court in July after the FTC filed for a preliminary injunction seeking to block the transaction. The parties are currently going through an appeals process in the UK following the Competition and Markets Authority decision to reject the transaction. Both companies have subsequently extended their merger contract through October 18th of this year and remain confident in closing their transaction. Not only have the FTC and the Department of Justice in the US made it clear they're willing to challenge transactions that poke at the linings of merger laws, but regulators around the world are beginning to assert their power over transactions as well. On June 27th, the FTC and DOJ jointly announced potential changes to merger review process to revamp their antitrust enforcement, which will more closely match the requirements of international jurisdictions. Potential changes include more detailed filing requirements from the merging companies, which may lengthen the time it takes for transactions to close. While the agencies have allowed for public comments to be submitted, the ultimate impact on new deals is yet to be seen. But one thing remains true, and that is the need to compete on a global basis and grow through acquisitions, which remains an underpinning for transactions to take place. Buyers and sellers remain committed to closing their transactions and honoring their merger agreements. As was evidenced in the second quarter of the year, announced mega deals, or those deals greater than $10 billion in value, may remain muted because of this increased regulatory oversight, but smaller, highly accretive, and synergistic transactions are likely to remain. While small, the improvements in certain corners of the M&A environment in the second quarter are positive signs for a broader rebound in deal making. To learn more about our merger arbitrage investment strategies, please visit Gabelli.com.